Welcome to the Real About Real Estate podcast with Michelle Hayward. Get the latest information meant for buyers and sellers straight from real people in the industry.
Welcome to my podcast, my very first podcast, where I'm hoping that you will find the information informative, exciting, and lighthearted. That's how we plan on presenting this information to you. So we've set all of our nerves aside, and we have a bunch of great laughter we plan to incorporate into this podcast. And again, we just hope you get a lot out of it. So for my very first podcast, I thought it was best to have a feature that buyers specifically could benefit from. And so I entitled it Home Ownership 101. And with me to talk a little bit about some of the questions, and these are just highlights. There's obviously a whole lot to talk about, but we're just going to touch on some highlights today. And so with me, I have Sarah Northern from Fairway Mortgage. And Sarah was so kind to accept my invitation. And just want to say hi and thank you for accepting. How are you today?
Thank you. Thank you for having me. I appreciate it. I love the intro. It's great.
Thank you. Thank you. Well, I want you to sit back and relax, and we'll try to make this painless as possible for the both of us. So we'll get right into it. So one of the first questions I wanted to ask you about, and again, this segment is primarily targeted towards buyers, and I get the questions all the time. And obviously, with us being in related fields, a lot of the information that we share with potential clients and clients is a lot of the same. But I thought it would be great for them to hear it from you, a mortgage expert. So with that, one of the first questions I wanted to ask you is, what products or programs do you offer at Fairway Mortgage?
So we do have a lot of great products with Fairway. Some of the ones that we offer that are more popular right now due to the market is called a 3-2-1 buy down. This allows for seller concessions to help buy down your rate, so your interest rate for our current client. So basically, these funds will go into an escrow account and it will allow for your interest rate to be lowered. For example, if your interest rate is 6%, the first year it could be lowered to 4%. The second year, it would be 5%. And then the third year on until however long your term is, it would be the 6%. So this allows for our buyers to save on interest, and it allows them to save almost thousands of dollars because this is put into a escrow account, and it's only used to help with the interest rate. We also have a permanent buy down where the borrowers can buy down 1%, which is 1 point. So if the interest rate is 6%, they can buy it down to 5%. It is 1% of the loan amount is what you would be paying for that permanent buy down, which you would pay at closing. We also do have jumbos available and arms. They're not the most popular right this second because we do have these other great programs that we are offering for our borrowers. But those are the programs that we are offering right now. We also do have down payment assistance programs. They are limited just based off the market, but we do have them available for people that might not have the full amount for a down payment. We could seeing what is available that day because it does change day to day, and seeing if they can help with the closing costs and with your down payment.
Well, that's awesome. And one of the things that I know, and this is just based on my experience of having been in this business for quite some time and working with various mortgage lenders, most often mortgage lenders have a lot of the same products and features to
Correct.
offer their
Yeah.
customers. But the beauty of it is that I know many mortgage companies do try to tailor certain programs to the needs of what the economy is doing, quite
Mm,
honestly. And so
correct.
it's great that Fairway has different products and programs to be able to offer to really every home buyer.
Yes.
One of the questions that I also wanted to kind of piggyback on the down payment assistance program
Yeah.
that you mentioned. So for, and I know this is not a question that I put before you in advance,
No,
but
you're
I
good.
wanted to
Go ahead.
cover it now. So with that down payment assistance program, what would be expected of a buyer to be able, what conversation would you have more or less with the buyer when you're talking about the down payment assistance program?
So the conversation I would have is, are they do they have enough for the percent down that is needed? So for a conventional loan, we can go almost as low as 3%, between 3 and 5%. And then for a FHA loan, we can go 3.5%. So basically, we want to make sure that they have the assets to cover those costs, because that has
Okay.
to come from the buyer. It can't come from seller's concessions, or and it's not included with, or it is included with the closing costs, but or in sorry, it's on top of what the closing costs are.
Hmm.
So you have to
Okay.
come in with those funds, along with closing costs. So
Okay.
I basically would want to make sure that I let the borrowers know how much we're looking at, based off the price point that they're looking into, and then making sure they have that covered. If not, then we would look at what, DPAs is what we call them, what
Hmm.
DPAs are available at that time, based on their needs.
Okay, awesome. Well, thank you. Thank you for
Mhm.
touching on that a little bit more deeply. I know when buyers approach me and we have similar conversations, that's one of the things that I cover with them is just making sure that whatever property that they're interested in, that they certainly start looking at, credit and
Yes.
what the requirements are, the debt to income ratio,
Mhm.
making sure they have enough to put down for that particular property and just kind of giving them a ballpark, but certainly referring them to a reputable mortgage lender such as Fairway. And that way they can get the conversation started. Well, thank you for
Yes.
answering that. Now,
No worries.
as far as the buyer preparation, not specific to down payment assistance
Mm.
specifically, because we've already talked about that, but just overall, the buyer preparation. What would you say to them, even if it's similar to what you've already said? Can you expound on that a little bit more in a general sense?
Yeah, I suggest that once you talk to your realtor and you kind of have discussed with your realtor what your needs are, that you do reach out to a lender, to talk to them, give them your story so they can understand what you are looking for. At that time, then they would suggest that you fill out an application, which will allow for us to understand everything that is going on. So we will look at your credit, we'll look at your assets, your liabilities, um, how much you're trying to get approved for, and so forth. And this will allow for the lender to be able to show what programs we do have available and what's going to best benefit the buyers.
Okay.
We have a phrase, or I guess you can call it a phrase, but it's called the 4 C's. So basically, it's capacity. What's your capacity to be able to pay back the loan? What's your employment history, your income? Do you have savings, and what are your monthly debts? What obligations do you have other than liability, or what obligations you have, such as liabilities like child support, or do you have alimony, or do you have any student loans, so forth like that. The next C would be capital. We want to make sure that you have money that is readily available. So, do you have any IRAs? Do you have any savings accounts? Are you planning on maybe getting a gift from a family member, such as your mom and dad? There are certain people that you can get gifts from, so that is nice to help with your down payment and your closing costs. Also, collateral. We want to make sure that the value of the property and what you currently have, that be um, it's going to be the best property for you, and that it's the best loan amount for you, so we don't put you in the hole. We don't want to our goal is not to make you house poor. We want to make sure that you can have a house but also be able to um, live your life to the fullest in what you want to do on the extracurricular activities, basically. And then the fourth thing, sorry, would be credit. So we want to run your credit, make sure your credit scores are good, and that we can find a program that will suit you with your don't have the best credit. We always have room for improvement, and we have great tools that we can set you up with to help improve your credit. And we want to always look into the future on to set you up.
Well, that is really a lot of great information, and it's ironic that you would mention the four C's because going back to my days as a lender, I know those four C's. It's kind of ingrained in my brain. So thank you for
Yes.
covering that. And it's
No
certainly a lot
worries.
of information.
Yeah.
And I know buyers would probably most buyers who are not familiar with what mortgage lenders really look for to approve a buyer or to at least be able to assist a buyer with approval. They don't know all of those things, so they certainly need and can benefit from this information. And quite honestly, they don't have to know. I mean, that's what they rely on us for, right? They
Yeah.
rely on us to be able to guide them, navigate them through the whole process, which can be a little grueling at times.
It
But
can.
thank
Agree.
you. Yeah, it
No
definitely,
worries.
definitely can.
Yeah.
So
I
the
want to say, sorry.
no.
Yeah,
Feel
no,
free,
I
go
want
right
to
ahead.
say, as a borrower, you want to understand what the process is going to be like. So you want to
Absolutely.
ask those questions to your realtor and to your loan officer. What's the steps? What does it take to get qualified? What once you do find a property? What's the
Hmm.
steps once you find a property? You understanding what the steps are is going to be best so that you're not left in the dark and you're not always wondering what's going on.
Right.
And the more information you know, the better you're setting yourself up.
Absolutely. And it is a team effort. It's not just working with a client that maybe, I as the realtor have brought to Fairway Mortgage or Fairway Mortgage has brought to me as a realtor. It's a team effort. We're collectively working on behalf of this client, and the client should be in a position where not only do they trust their realtor and trust their mortgage lender, but that they can feel comfortable in knowing that we're really fighting for them,
Correct. Yeah.
that
And
we're
you
we're
want to make
giving
sure
them
that,
everything they need.
yeah, and your loan officer and your lender kind of have a relationship so that
Hmm.
you can rely on both of them and that they're communicating along with how they communicate individually with the
Right.
borrower.
Right, absolutely. And it's a process from beginning to end, quite honestly.
Yeah.
They start out with both of us in the very beginning, and we're going through this process with them until the very end. So,
Yeah.
they need to understand or should understand you want to really have a good relationship, a great
Correct.
relationship with those that are representing you. So thank you
Agree.
for that.
No
So,
worries.
what do you find? What has been your experience with the common mortgage mistakes that you see out there?
The common mortgage mistakes that I see are people think that they need 20% down, which is not true. We
Right.
have first time home buyers programs. And as a first time home buyer, people think, oh, I've owned houses before, so I don't qualify for a first time home buyer. And that's not true. First time home buyers are um, anyone that has not owned a proper or that has not bought in a property in 3 years.
Hmm.
So if you can be considered a home or first time home buyer, even if you've owned properties in the past. So that's great because then you get lower interest rates, and you get a higher chance of approval. Also, you have a chance to pull out from your IRA without getting penalized. If you do have an IRA, they will allow you to take money out for closing costs. So there's lots of benefits for a first-time home buyer,
Hmm.
and don't write it off. That's what I would have to say. Check into it. Make sure you talk to your lender to see if you qualify for a first-time home buyer, to see if you can go with the FHA loan,
Hmm.
or even a conventional loan, just based off of what your story is.
Okay.
Um, some of the other ones we see a lot is that people come and say, "Well, credit's not good enough." Well, you don't know that exactly.
Right.
We
So how will you know that unless you pulled it?
Honestly, they do have those free services out there that
Yeah.
can be full pooled, and you can see what roughly your credit scores are, but it doesn't mean exactly what they're showing you versus what we pool in our system is going to be the exact same.
Hmm.
So we have, for FHA loans and VA loans, we can take credit scores as low as 580. Conventional, we can go as low as 620, and then for jumbo 680. So we can work with credit scores, and if you're close, we can always look to see what we can do immediately or within the next 6 months, what we can do to raise your credit score up, to help those borrowers so that they can qualify for a certain loan program.
Okay.
um, Also, I have seen that, speaking of credit, people are very worried that when we pull credit, it's going to tank their credit.
Oh,
And
yes. Thank you for mentioning this.
true. Your credit might fluctuate anywhere from 1 point to 5 points, but it's not going to be this. Yes, it is considered a hard pull, but it's not going to tank your credit. It's not going to drop your
Oh,
credit.
I hear that so much. I do. And that's why I
So,
appreciate you mentioning that.
yeah, so that's basically a lot of the misconceptions or the mistakes I do hear.
Yeah.
A lot does have to come with credit, because they're very concerned, and I get it. I totally understand. I'm right there with you. You want to make sure your credit is great, and you don't want anything to happen to your credit because
Mhm.
you've worked so hard to try and keep your credit up.
I hear that so much with clients that I've worked with in the past, been blessed to work with, and even potential clients today. That's one of the questions that I get is, I've already had one lender run my credit. If I have another lender do maybe, take a second look at it or something, I'm going to have my credit hit again. And
Mhm.
and I had that same conversation with them. And quite honestly, if they're working with the right lender, that lender will tell them that no, this is how this
Correct.
process works. If I run your
Mhm.
credit now, this is the impact that you will see. And if we run it again at another time, or a different lender runs it again within a certain window of time,
Correct.
and I believe that window is 30 days, is what I've
Yes.
been told
Yep.
over the years, and that's been my experience. So that obviously still holds true. So
Yes.
again, great information for buyers. So
Mhm.
if there's some buyers out there who are thinking that my credit is just not that great, I have things on my credit history that might hinder me, or whatever issues they might foresee or have misnomers they've been told, this kind of debunks some of those myths, especially the
Yeah, for sure.
20% down conventional.
Yeah.
I've always heard that out of all my years, and I say, no, you don't have to
Yeah.
have
No.
20% down for
Nope.
conventional.
Yeah.
I used to think that before getting into this business and even
Agreed.
being a
Yeah.
lender. because that's all I ever knew.
Yeah,
Yeah.
that's what's been drilled into us, that you need 20%, 20%,
Right.
20%. So then people are like, they don't feel like they can get a house because they're
Right.
like, I don't have 20% to put down because that's a
Right.
lot of money.
It
So
is.
I understand the frustration that people do get when they don't understand. So coming to yourself as a agent or myself as a loan
Hmm.
officer and understanding and asking those questions, it can help answer a lot for our clients
Absolutely.
and borrowers.
Absolutely. I think some buyers automatically, because again of these misconceptions, they automatically assume that they can't buy. And then it just really it discourages you,
Correct.
from even trying until you actually talk to somebody who says, no, you've just been misinformed, or you might not have understood all the ins and outs of everything. And it's best to actually sit down and talk to somebody who can walk you through everything.
Yeah,
And
for sure.
I've gained clients through that process.
Yeah.
Once they thought, or found out that they actually might qualify and did qualify when they pursued it. I mean, it was the greatest feeling in the world too, to be able to
Yeah.
help somebody who didn't think they could be helped.
Exactly. Yeah.
So
And
yeah,
I've worked with people that we've pulled their credit and it's taken a year before we
yeah,
can move forward. And they're just very grateful that we were able to help them, guide them down a path to get
right.
their credit scores up. Mortgage or Fairway does offer free credit tools help. So we have a actual team that will contact our borrowers and guide them on what they need to do to raise their credit over 3 months, 6 months, and a year. And if you have any questions, you can always contact them. They're credit analysts. So you can contact them, ask them any questions that you may have. So it's a great service and it's free through Fairway
Oh,
once we do
nice.
give an application. So that's really nice for us too, because it allows us to work with our borrowers. It might not be today that we're getting you into a house, but if
Right.
we can guide you and get you into a house in a year, I think that's the best case scenario.
Yeah, and you're absolutely right, Sarah. And that's really what is needed by many buyers who don't understand even the first steps of, what do I do? And
Correct.
they shut down and they feel stuck because to them there's no option right now there, and
Yes.
quite often because they don't know what to do, they continue to either do nothing
Yeah.
or make poor decisions, which
Yeah. They
pushes
make
them
things harder.
further
Yeah, for
right, pushes
sure.
them
Yeah.
further away from what they need to
Yeah.
be doing. So having that conversation with experts who can set the guidelines to at least say, this is where you are today and these are the things that you need to do to
Yeah.
get to that goal, and the
Mhm.
and the estimated time frame of when you can get there if you do
Yeah.
these things is what's so needed. So
Yeah.
thank you for that.
You're
uh,
welcome.
One of the last questions that I wanted to ask you, because I do want to be respectful of your time,
No, you're
is
good.
the thank you. So I think we're doing good here.
Yeah, we're
So the
doing
so the 2023 mortgage predictions, what are you
good.
hearing?
Yeah, so industry experts that are very much smarter than I am, and have
No
been in
way.
the
No way.
industry have been in the industry a lot longer than I have. They believe that the mortgage rates will decrease 1 to 2 or a percent or two, so 1 to 2%,
Okay.
once the inflation stabilizes over the next year or two. Uh, Although interest rates, you might see that the interest rates are high right now, they are still at an all-time low based on the average since
Yeah.
1971. So they are high based on what we have seen since 2020, because 2020 was an all-time low, but they are still really good right now. And it is a buyer's market right now. A lot of people are willing to give sellers concessions, which are sellers credits,
Hmm.
which can help our buyers out because that can go towards closing costs, that can help pay for appraisals or inspections, home warranties. There's so many things that you can bind down your rate. There's so many things you can put, or you can add that money to pay, which allows for these borrowers to only have to come in with the down payment. I've seen people use the down payment assistant programs and use sellers concessions, and they don't have to come in with any money or
That
very
is so
little
awesome.
money. So that's really cool for them because they're now getting into a house that has now become an asset, and you have instant equity, because you just bought a house that's worth
Mhm.
however much you are, the house is valued at.
Right, right. And who would have thought that we would have seen it transition into a buyer's market, because it was such a
Exactly.
strong seller's market,
It was.
a year ago. And who would have ever thought,
Yeah,
3%
for
interest
sure.
rates, right?
Yeah.
It was a great time for sellers. And quite honestly, I believe it's still a great time for both buyers
Oh,
and
yeah, for
sellers
sure.
in this market.
Yeah.
Buyers have a little bit more of a leg up now, but
Yes.
they've been waiting patiently for it.
Yes.
So we say economics 101, as I always say, what goes up must go down, and what goes
Yeah.
down must go up at some point.
Yeah.
So
It will fluctuate. It will go up
yeah,
like a mountain.
absolutely.
It's
There you
gonna
go.
every year changes, unfortunately, but that's life.
Yeah, that is how it goes. You're absolutely right. Well, listen, I appreciate so much you being on here with me. Again, my first podcast, and I think it was a lot of great information that was shared. And you're
Thank you
so
for having me.
knowledgeable in your field. And again, I certainly appreciate all the tools that you've given
Thank you.
those that will watch this video. And I hope that in some way, even in some small way, that it helps those home buyers who are out there, even
Perfect.
maybe giving them that push to
Yeah.
move forward, or at least to have the conversation.
Yeah.
So with that, if you would not mind giving your contact information of how people can reach you should they have questions.
Yeah, you can go ahead and reach me via email or even over the phone. My phone number is 480-440-0812. You can also reach out via email, and my email address is sarah.northern. So it's sarah.northern, northern, @fairwaymc.com. And so that is FAIRWAYM is in Mary, C is like Charlie.com.
Well,
And you can
thank
reach
you
out
so
either
much.
way. You can even reach out to Michelle and she can get you connected with me via email, whatever's easiest.
Absolutely. And I'll send you directly to Sarah.
Send it my
Well,
way. I'm here to help. I want to
well,
help.
and I know again, there's so much that we could talk about when it comes to home ownership, and I'm sure there are probably a lot of questions that buyers have that we obviously would not be able to cover in a short segment of about 30 minutes. So, if it presents itself again, which I'm sure it will, I'd love to have you back on, and we,
Perfect.
talk more about some other different things, and even, to be fair,
Yeah.
we'll touch on what you might be seeing out there based on your experience with sellers too. And
Yes.
we can just kind of share some stories here to hopefully help those who are watching this podcast.
Perfect.
Other than that, thank you again. And I hope you have a great day. And before
Thank
I
you.
let
You
you
too.
go, aside from having a great day, one of the things that I wanted to incorporate in the podcast is at the end of each podcast, it's just leaving the viewers with something to take away from the day. So for today's podcast, it's be kind to yourself and give yourself grace.
Oh,
One of the things that Sarah and I talked about, and I'm having to incorporate in 2023, is to get out of my own way, to get
yeah.
comfortable with the uncomfortable. And so if you don't always get it right, you're your only competition, not anybody else. So with that, I hope you have a great day, Sarah, and it was a
Thank you.
pleasure
You too.
having you on.
Thanks.
You
I
take
appreciate it.
care.
You too. Bye
Uh,
bye.
Thank you for tuning into the Real About Real Estate podcast with Michelle Hayward. Like, follow, and subscribe to continue to get the real about real estate.